Hello, fellow financial explorers. You are watching Investing Iguana, your trusted guide to the wild world of investing. Today, we're going to venture into the dense and diverse terrain of the real estate investment trust, REIT, sector, and zoom in on one of its most fascinating specimens, Parkway Life REIT. Now, you may have noticed that this stock has been on a downward slide since March 1st, 2023. You've been wondering what's going on with Parkway Life REIT? Why is it losing its shine? Well, fear not, my friends. I'm here to answer your burning questions. So, let's get started. First of all, let me assure you that Parkway Life REIT is not in any serious trouble. In fact, it posted a pretty solid performance in its 1Q23 business update. The income available for distribution was $22.1 million, which was a 2.5% increase year-on-year, YOY. This was supported by a 21.7% and 23.5% YOY increase in gross revenue and net property income, NPI, respectively. The boost in revenue to $37.3 million from $30.7 million in 1Q22 was partly due to contributions from 5 nursing homes in Japan that it bought in September 2022 and higher rents from Singapore properties under new master lease agreements. However, not everything was smooth sailing for Parkway Life REIT. Despite the overall positive numbers, Parkway Life REIT's Japan operations reported a 7.4% YOY drop in revenue/NPI to $11.9 million/$10.7 million in 1Q23, affected by the weakening of the yen. Also, the REIT's gearing rose to 37.5% from 36.4% at the end of FY22 due to additional capex funding as part of its capex renewal agreement for its Singapore hospitals. Another key factor in the stock's price drop was a change in market expectations. The DDM-based target price was lowered to 4 Singapore dollars and 50 cents, assuming a higher cost of equity of 6.26%, up from 6.06% previously, and a higher Japanese 10-year bond yield of 0.5%, up from 0.3% previously. So, as you can see, while the fundamentals of Parkway Life REIT remain strong, the stock price has been influenced by a mix of currency depreciation, increased gearing, and altered market expectations. But the stock's potential isn't gone. In fact, considering the almost 10% decline in the share price since March 2023, some analysts have upgraded their rating for Parkway Life REIT to ADD with a potential total return of 17%. So when's the right time to buy Parkway Life REIT? Well, that depends on a few factors. Firstly, you need to look at the fundamentals of the company. This includes the company's earnings, revenue growth, debt levels, management efficiency, and other financial ratios. From the recent reports, it seems Parkway Life REIT is doing well on most of these parameters, with robust revenue growth, high net property income, NPI, and a healthy distribution per unit, DPU. Secondly, you need to look at the valuation. A common method is to use a metric like price to earnings, PE, ratio, or dividend yield. The former compares the price of the stock to its earnings, while the latter compares the annual dividend payment to the stock price. Thirdly, you should consider the market expectations and sentiment. In the case of Parkway Life REIT, the analysts have assumed a higher cost of equity and a higher Japanese 10-year bond yield, which has led to lowering the DDM-based target price to 4 Singapore dollars and 50 cents won. However, after the almost 10% decline in share price since March 2023, some analysts have upgraded their rating for Parkway Life REIT to ADD with a potential total return of 17%. This suggests that at the current price, the stock might be undervalued. So, when is the right price to buy? There's no easy answer to this question. The right price point depends on your personal financial goals, risk tolerance, and investment horizon. It's advisable to consult with a financial advisor or do your own thorough research before making any investment decisions. Remember that investing always carries risk, and it's important to be comfortable with the level of risk you're taking on. Ultimately, the best time to invest is often when you believe the stock is undervalued compared to its intrinsic value and when it aligns with your individual investment strategy and goals. Always make sure to do your due diligence before making any investment decision. In conclusion, remember that the stock market is like a jungle, sometimes unpredictable, often challenging, but always rewarding for those with the patience and the will to navigate through it. Keep your investing boots on, stay informed, and as always, keep adventuring. Thank you for watching the Investing Iguana. If you enjoyed this video, please give it a thumbs up and subscribe to our channel for more financial tips and tricks. And don't forget to hit the bell icon so you won't miss any of our future videos. See you next time. We hope you learned something new and useful from this video. If you have any questions or feedback, please leave them in the comments section below. We would love to hear from you and answer your queries. That's all for today. Stay tuned for our next video. Until then, happy saving and investing.